Episode 14, Complying with Tax Requirements. Welcome back to Start Your Business Today. Today we're diving into a crucial aspect of entrepreneurship, complying with tax requirements. Whether you're starting a business in North America, Europe, Asia, or anywhere else in the world, understanding tax obligations is vital for your success. Taxes can be complex and intimidating, but by the end of this video, you'll have a clear roadmap that simplifies everything you need to know about taxes. Grab your notepad and let's get started. Keyword definitions. To build a solid foundation for our discussion, let's define several key terms related to taxes that will be essential throughout this video. 1. Tax obligations. The legal responsibilities of businesses to report and pay taxes on income or profits. 2. Tax authority. The governmental agency responsible for tax collection and enforcement in any given country. 3. Tax identification number, TIN. A unique number used by tax authorities to identify individuals or businesses for tax purposes, varying by country, e.g., EEN in the US, VAT number in the EU. Tax deductions. Expenses that can be subtracted from total revenue to potentially reduce taxable income. Estimated taxes. Prepayments based on expected tax liabilities throughout the year, often applicable to those who are self-employed or earn income not subject to withholding. Filing status. The category defining the rates at which individuals or businesses are taxed can vary by jurisdiction. Value-added tax, VAT. A consumption tax charged at each stage of production and distribution, common in many countries. Segment 2. Why compliance matters. Now that we understand the key terms, let's discuss why compliance with tax requirements is essential for entrepreneurs everywhere. Avoiding penalties. Strong tax compliance helps you avoid significant penalties. Not complying with tax regulations can lead to fines, increased scrutiny, and even legal issues. Ensure you understand the regulations that pertain to your jurisdiction to avoid any unpleasant surprises. Company reputation. Your business's reputation hinges on its transparency and honesty. Non-compliance can lead to reputational damage, making it harder to attract customers or investors. A business known for ethical practices is far more appealing. Financial health. Understanding tax obligations empowers you to better forecast and manage your finances. This allows for smart investments and growth planning, providing a clearer picture of your business's profitability. Contribution to society. Taxes play a crucial role in funding public services. When you comply with tax requirements, you contribute to your community's infrastructure, healthcare, education, and more. It's about building a better society for everyone. Segment 3. Key steps to complying with tax requirements. With this foundational understanding, let's explore the essential steps every entrepreneur should take to ensure tax compliance. Step 1. Obtain a tax identification number, TIN, why you need it. A tax identification number is vital for operating a business and is often required for tax returns, hiring employees, and business banking. How to obtain it? The process generally involves 1. Research local regulations. Each country has its own procedures, so check your tax authority's website for specifics. 2. Complete the necessary application forms. Many countries allow for online applications, but some require physical paperwork. 3. Submit documentation. You may need to provide proof of identity, business registration, and your business address. Step 2. Understand your business structure. Different structures. The tax structure you choose influences how you report and pay taxes. Common structures include sole proprietorship. Income is taxed as personal income. Partnership. Income is split among partners, typically reported on personal tax returns. Limited liability company, LLC. Offers liability protection. Taxes can be treated as pass-through or corporation. Corporation. Subject to corporate tax rates and sometimes subject to double taxation, depending on how profits are distributed. Implications on taxes. Understanding the tax implications of each structure helps you make more informed decisions for your business. Recommendation. Consult local tax advisors or legal experts to choose a business structure that aligns with your financial goals and offers the protection you need. Step 3. Keep accurate records. Importance of record keeping. Accurate and organised record keeping is critical for tracking income, expenses, and ultimately filing your taxes. What to track? Ensure you consistently record business income, revenue from sales or services, business expenses, everyday costs necessary for operation like supplies, rent, and utilities, receipts and invoices, essential for validation and deduction purposes. Tools to use. We suggest leveraging accounting software like Xero, Wave, or Zoho Books to simplify this process. Consider creating electronic files for improvement on accessibility and organisation. Step 4. Know your deductions, common deductions, available. Deductions can vary globally, but here are several common examples. Home office deduction. If you operate from home, you may qualify for a deduction on a portion of your home expenses based on the size of your workspace. Business travel expenses. Costs related to travel for business purposes, such as airfare, accommodation, and meals, can often be deducted. Business supplies. Items needed for your daily operations, like office supplies, equipment, and software, are usually deductible. How to claim. Deductions. To maximise your deductions, consistently track all expenses and note which are applicable. Regularly consult your local tax authority's guidelines to stay updated on available deductions. Step 5. Determine state and local tax requirements. Research country-specific laws. Tax laws differ widely between countries, and sometimes even within regions. Investigate the requirements applicable to your business's location. Registration. Ensure that you register with relevant tax authorities. This might include sales tax registration or specific local business taxes. Reminder: don't forget about other local obligations, such as business permits or trade licenses required in your community. Step 6. Make estimated tax payments. Who needs to pay? If you're self-employed or your income isn't subject to withholdings, you may need to make estimated tax payments periodically. How to calculate. Many tax authorities provide guides or forms to determine estimated taxes. Generally, this involves forecasting your expected income and expenses to calculate an approximate tax obligation. Payment schedule. Typically, estimated tax payments are due quarterly, so mark your calendars accordingly to avoid last-minute stress and penalties. Step 7. Filing your taxes. When to file. Be aware of filing deadlines specific to your country and local jurisdiction. Make sure you're familiar with any extensions that might be available as well. Filing methods. Consider these approaches to file your taxes. Online tax filing. Use platforms offered in your region that facilitate electronic filing. Hiring a tax professional. This can be advantageous if you have complex tax situations or prefer expert support. Submitting paper forms. Some jurisdictions allow this, but be aware this method can be slower. Review before submission. Always double-check your entries. Errors can lead to disputes, audits, or an incorrect tax bill. Basic mistakes include typos in numbers and incorrect data entries. Common mistakes to avoid. Now, let's address some common mistakes that you should avoid when handling your taxes. 1. Not keeping receipts. Failing to retain receipts and documentation can hinder your ability to substantiate deductions and expenses during tax time. 2. Misclassifying workers. Ensure you classify employees and independent contractors correctly, as misclassification can lead to serious legal issues and back taxes. 3. Ignoring tax deadlines. Keeping track of all tax deadlines is critical from estimated payments to annual filings. Many tax authorities provide resources to track these dates effectively. 4. Not seeking professional help. While you may think you can handle everything yourself, tax regulations are intricate. Don't hesitate to engage professionals who can provide tailored advice. Segment 5. Resources and tools. To aid you on your journey towards tax compliance, here are valuable resources and tools you can use. Tax authority websites. Familiarise yourself with your country's tax authority resources. They often provide essential tax guides, forms, and updates on tax laws. Accounting software. Tools such as FreshBooks, QuickBooks, and Xero can help streamline your accounting processes and help maintain accurate records effortlessly. Small business development centres. These organisations often provide training sessions and resources that assist small business owners with tax compliance and business planning. Networking groups. Consider joining local or international business networks or forums where you can learn from others' experiences and share resources. Closing. And that's a wrap on our guide to complying with tax requirements as an entrepreneur. Remember, staying informed and proactive about your tax obligations is critical for your business's health and longevity. If you found this information helpful, please give this video a thumbs up and subscribe for more valuable content. Share this video with fellow entrepreneurs who might need some direction on tax matters. Are you ready to take your business to the next level? You can find more related materials to what we share here on bizbuddy.com.ng. bizbuddy.com.ng is a cutting-edge online resource hub, meticulously crafted to cater to the needs of entrepreneurs and business owners seeking a comprehensive repository of information, tools, and resources to bolster their business acumen. Your input matters. What specific tax topics would you like us to dive into next? Leave your thoughts in the comments.